All right, guys, in this video, I'm going to teach you the steps you need to take in order to enter a fix and flip property as a journal entry into QuickBooks. So make sure to watch the entire video so you don't miss any steps. So let's get started. So what I've done here, I created a fake account, you can also say, in QuickBooks, and I called it Bold Flips. Now, if we go look at the reports, and if we look at the balance sheet from year to date, right now what we have is $20,000 in the bank. So we don't have any other assets besides the cash. We don't have anything. We just have 20,000 in sales. So the first step that you need to take when you're inputting the property into QuickBooks is to go ahead and look at the HUD statement. Now, I've created this one in Excel, but the HUD statement is going to look similar to this. Obviously, I didn't want to use my client's HUD statements for privacy reasons, but this is going to be fairly similar, so you should be able to follow along. So let's take a look at the HUD statement. So this is for property 123 Park Road. And in this section of the HUD statement, you're going to find information about the buyer. So this is all it's saying is that you're purchasing the property for $160. You have some settlement charges for $1,500, and if you scroll down in your HUD statement, you're going to find the breakdown of those costs. Right, you're going to see some closing fees, title agency, recording fees, and the total amount due from buyer, meaning yourself, because you're the one buying the property, is going to be $161,000. Now, this next section is how do you intend to pay for it? So you're going to get a note or a loan from someone. This can be a private lender, hard money lender, mortgage. In this case, we're going to call it, private money from an individual, and it's going to be for $150,000. And also, there's some prorated taxes that the seller is going to pay because they own the home from January to May 4th. And then at the end of your HUD statement, you should see this little box where it's basically saying, okay, this is what's due from the buyer, $161, minus what has already been paid for, the $150. So in order to close this property, you as a buyer need to bring to the table $10,700 in order to close this. Right. So step number one is to look at the HUD statement, look at the numbers that we're going to need to make this journal entry. And another thing is look at the settlement date, because for every journal entry, it is important to put the settlement date. Okay, so now we're going to move on to step number two. Step number two is I always like to do everything before I input it into QuickBooks into an Excel spreadsheet. Now, the reason why I use an Excel spreadsheet is just I believe it is much easier to see the information, and you're able to see if your journal entry balances. If you try to do it on QuickBooks, which you can really do, I just find it that it is really messy to try to do it in QuickBooks. So now, for the sake of saving time, I've already done it ahead of time, but you guys can stop it, pause the video, and take a look at the file. Okay, so I'm going to be flipping back and forth so you see where I got all my information. So before we move on to the journal entry, we need to do something important, and that's create the new chart of accounts. And basically, the chart of accounts is just a list of accounts that you're going to use to categorize deposits, categorize withdrawals. So in this case, since we are buying a property, we're going to need to create an asset account for the property, and we're going to call it 123 Park Road. So let's go ahead and do that. QuickBooks. So what we're going to do is you're going to go to accounting, you're going to go to chart of accounts. See your chart of accounts. Okay, so this is your chart of accounts. These are all the categories that you have to categorize transactions. So we're going to go to new. And then here we're going to select other assets. I mean, you could select fixed asset, but in this case, since most fix and flips are really, really not held for a long time. I just like to categorize them as other assets. But if you categorize as fixed assets, it shouldn't be a big deal. And then from here, I'm going to put, let me see. I don't want to use that one. Let me see. You know what? Let's do fixed assets, and let's do here other assets, other fixed assets. There you go. So now here we're going to name it 123 Park Road, and then we're going to go save and close. So now we created 123 Park Road fixed asset, add other assets. Okay. So the other account that we're going to need is create a liability account, and this is going to be from the loan that we're going to get, as we saw here, for 150. So now let's go to, so now let's go create that. Right? So now here we're going to create other current liabilities, and the reason why you would want to use long-term liabilities is long-terms are more than 1 year. Since, like I said before, most fix and flips are less than a year, you're not going to have these on your books for a long time. So I would choose other current liabilities, and then from here I would use you can use other current liabilities or loan payable. Let's use so other current liabilities, and then we're going to put liability 123 Park Road. You know what? Let's put loan payable. Okay, save and close. All right, and let me see. That should be at the top. Oh, did I not? Okay, so when they made the change, no. Okay, so when I made the change, it changed the name. So you can always go back just like I did it, edit, and change it. So liability, we're gonna name it 123 Park Road. And then here in the description, you know, you can put any information, you know, if it's a, you know, flat, you know, 4K fee or 2%. You know, you can put in the description more details about the loan if you want to. I would suggest you do it just so you keep track of this information. But for right now, we're not going to do it. Okay, so now you should have the liability 123 Park Road. Okay, so this is step number 3. Now let's go in Excel and create the journal entry. So step number 2 is to go to the chart of accounts and then create. Okay, so now we're done with that. So now we're here. Okay, so how do we allocate these costs? So let's go to the sample file and let me, okay. So as you can see, this is a chart of accounts we just created, liability, and then we have this one called cash checking. But first, let's go with this transaction. So our 160 in the contract sales price, that's going to be a debit to the asset because it increases, even though cash is going out, we are buying a property, which is an asset, and is increasing the value of the assets. So here we're going to put the 160, and in the description, we always want to make sure it ties to the HUD statement, because it just makes it easier. Well, if we're trying to, if someone's going to audit the report, that we know, even though here I put property sales price, contract sales price, so you can change this to contract sales price, right? Now it's very, very important that you activate this class, and we're going to do that shortly. Okay, so we have 160. So the closing fees. So now we're going to break down the closing fees. Right here, 900 closing fees, and then we're going to put the name of the company that we paid those closing fees to. We have the title insurance agency, 500, right? We're also going to make it part of the asset. And then the last one, the recording fees, 100. We're going to make it part of the asset. Now, I've seen a lot of videos where, they'll expense these these costs. Um, I always say, verify with your CPA, but, I know from experience that these closing fees, title insurance agency fees, recording fees, all of these are part of the asset because they can be directly linked to the asset. So therefore, you need to capitalize these costs. But once again, share with me in the comment box if you've seen this done differently. Okay, so now we move to the liability. So we have, you purchase the money, the note payable. So the loan payable is going to be a liability. Liabilities are always credits. And then here, purchase money note. You're going to put purchase money note. And then here you can put, if you got it from Adam Sandler. Okay. And now we got the taxes. The taxes we're going to use as credit, prorated county taxes. And then the last part, right, let me delete this, right? So right now you can see we've already inputted all this information. The only information that we haven't put is this cash from buyer. Now if you look at it, our journal entry doesn't balance. All journal entries must balance, right? So here, if we enter the cash, right, because this is money leaving our bank account, we put cash to closing. And now our journal entry is ready to go. So now using the journal entry, we're going to make the actual entry in QuickBooks. And once again, this is for purchasing a property with a loan. So let's go to here. Now, when you're in QuickBooks, once you want to enter a journal entry, you're going to click on this plus sign icon, and then you're going to go to journal entry. Okay, now this is the fourth step in our process, which is inputting the journal entry. Now, as you can see right now, we do not have the class row, which we need to go activate. So what you want to do is you're going to go to the gear icon. You're going to go to account settings. You're going to go to advanced. And then right here in this category where it says categories, you're going to click on track classes. Warn me when a transaction isn't assigned a class. Each row, save. Now, the reason why you want to use classes is that classes allow us to pull reports specifically for that property. Say you have 5 different properties. If you don't use the class category, it's going to be very difficult to look at what you spent on that property. You're going to have to go look at the report. I mean, it is possible. With the class property, what you can do is you can customize the report and only show you transactions for a specific property, which makes it very easy during tax season. Okay, so now that we've activated the class, what we want to do is go back. So now we're going to click on the plus icon, journal entry. And now, it's taking a while, guys, sorry. Okay, so now we have the class. Okay, so pretty much we're just going to copy and paste. So for account, since you've already added to your chart of accounts, Park Road. $160 description, contract. You know what? I don't like contract sales price. It just really doesn't make any sense. Property sales price. All right. There's a name for this one, and then now we're gonna have to create the class. 123 Park Road. Just gonna click on the plus sign. Save. So now you created that. Okay, so now we're gonna go 123 Park. Ignore this transaction that just was created. It was trying to balance itself out. Closing fees. I won't make you guys watch me do all this. I will make sure I fast forward. Now we're going to enter the liability. Here is 150. And this is for Man and Sandler. Park Road. There we go. 123. Prorated county taxes. And this is going to be cash. In this case, we have Bank One, and then cash for closing. 123 Park Road. Okay, so what we want to check here is to make sure our account balances. So as you look at it, it does balance. And all right, we have all the classes. We inputted the names that we had of the people. An additional step that you guys can take is attach your HUD statement here. So then that way, in case of an audit and the auditor wants to see, hey, why did you make this transaction? Well, they're going to have the attachment right here of the HUD statement. So they're going to be able to see how you came up with these numbers. So, okay, so now you're here. All you have to do to finalize it is create, save, and close. So at this point, you may think, okay, I'm done. Already created, I can go home. But there's one last step. This is step number 6 is you're going to go in your reports and you're going to verify that the information actually went to the right accounts. Trust, but always verify, guys. So let's go to the balance sheet. Oh, one more thing I didn't even cross my mind. So let's go to the journal entry. I almost forgot my own rule. So the journal entry was posted on this date. You want to make sure that you use the settlement date. 5/3, save and close. Okay, so now we're going to run the year-to-date cash run report. And if you guys remember, guys, I had in here $20,000. So we used 10,700, which makes a difference. So my bank account went down, but if you look at it, my assets went up, right? Same time, my liabilities went up too. And now you can see that my total assets equal each other. So now my liabilities here, my bank account went down, and my asset went up. So if we look at that, right, we have 160, the closing fees, recording fees. So all in all, this property is done. So guys, please like, comment, share. Let me know in the comment box what other things you'd like to see. Now click on the link below, and on the link below, I'm gonna have this Excel template available to you guys. So when you guys create your journal entries, you guys can download this and use this to balance your accounts. So let me know if you have any questions. Thank you. Share.